Welcome back. Now we are at the point where we're going to create our statement of cash flows. Hopefully you have watched all of the videos that tell you how to do this, and now we're going to do it. All right, so I'm starting with, on this first tab, make sure you've downloaded the worksheet so you can do this with me. It's more fun if we do it together. Okay, so I've got my income statement and my balance sheet for Falco Inc. for 2018. I've also got my 2017 comparative data, which you would find in your financial statements. On the second tab, I have other information. This is information that's not going to be obvious from looking at the financial statements, but we need to know that these transactions occurred so that we can include them in our statement of cash flows. You would know this if you were the accountant because you'd be able to go into the accounting records and find them, but it won't show up in your financial statements. Okay, you guys ready? Let's do it. All right, so I have on the third tab our blank statement of cash flows. We're doing it for the 12-month period ending at November 30th. All right, step one. What was step one of creating our statement of cash flows? Starting with, well, we're going to start with our operating cash flows. We're doing the indirect method. So step one is start with our net income. All right, so I am just going to go back to my financial statements, and I'm going to grab net income for 2018, which is $615,800. We'll just populate it there. Now we're going to add back our non-cash expenses. This is step two, add back non-cash expenses. So I'm just going to go and add from my income statement my depreciation expense, my amortization expense, and my gain or loss on sale of equipment. And a loss is going to be added back and a gain is going to be subtracted, because if they're non-cash, then a gain would have made net income higher, so we would subtract it from net income. A loss would have made net income lower, so we're going to add it back to net income. In this case, we have a loss, so we're going to add it back. All right, so we have our net income. We have step two. We've added back our non-cash expenses. Now we're going to look at the changes between net income, or between our current assets and current liabilities. Okay, I've just added in a little chart here. Remember, I told you to make sure this was the notes you took. That tells us that if we see an increase in our current assets, we're going to subtract that from our cash flows. A decrease in current assets, we will add to our cash flows. An increase in current liabilities, we will, sorry, I got this wrong, add to our current liabilities, and a decrease in current liabilities, we will subtract from our statement of cash flows. All right, so let's go back to our financial statements. And remember, we're not doing this for cash or marketable securities. We don't have marketable securities. Let's start with our current assets. So first we have accounts receivable. So this is just like when you did your variance. We take plus current year minus prior year. And we know that year over year, our accounts receivable decreased by $150,000. So if I go back over to my statement of cash flows, if I have a decrease, then I add it back. So I'm going to add back the $150,000. My inventory increased by $5,000. If I increase my current assets, then I subtract them. So I'm going to say negative $5,000. My prepaid expenses decreased by $14,000. So I'm going to go back here and I have a decrease. So I'm going to add $14,000 to my cash flows. All right, that's it for my current assets. That's all I've got. So now we're going to look at our current liabilities. And I'm just going to copy this formula down. You don't need to see me adding a bunch of times. But remember, it's current year minus prior year. So our first current liability is accounts payable. And accounts payable increased $30,000. So if I have an increase in current liabilities, I add it. So I'm going to add $30,000 here. Then my interest payable decreased $3,000. So I go over here. If a current liability decreases, I'm going to subtract. So I'll subtract $3,000. And my income taxes payable increased $7,000 year over year. If I increase my current liabilities, I'm going to add. So I'm going to add $7,000. All right. So to get my cash provided, if it's positive, or used if it's negative from operating activities, I'm going to add up all of these numbers. So starting with net income. So I'm just going to hit my add button, sum, and I'm going to add everything up. You can, of course, do this by hand if you want. So my cash flow provided by operating activities is $841,800. So that's a good sign, right? That shows that we have positive operating cash flow. It means that our business is sustaining itself. And that's good news, but that is not the end of the story for our cash flows. Okay, so now we have done operating. Now we're going to do cash flows from investing activities. And for this, I'm going to go to my other information. So the first thing I'm told is I sold a piece of equipment with an original cost of $50,000, and the equipment had accumulated depreciation of $40,000 and was sold for $7,000 cash. So the part we're interested in this is the $7,000 cash that we received. That is a cash inflow from investing activities because we sold a piece of equipment and we had cash come in for $7,000. We debited cash. So from proceeds of sale of plant assets, we had a cash inflow of $7,000. Let's see. We also purchased a piece of equipment for $80,000. When we purchase equipment, we debit equipment and we credit cash. We decrease cash. So over here, we're going to have negative $80,000 because we decreased cash. Okay. Everything else relates to equity, so that will go in the financing section. So this is everything we have for investing activities. So we're going to go ahead and sum this. And we have a negative number, so we have cash used in investing activities. So we didn't have positive cash flow from investing activities. We had negative cash flow from investing activities, primarily because we bought a plant asset. So you can see the 73,000 in brackets. It's a negative number, so it's cash used in investing activities. All right, let's go down to our proceeds from the issuance of common stock. So let's see what we did. We sold 50,000 shares of $10 par value common stock for $80,000 in cash. So again, the relevant part here is we debited cash $80,000. $80,000 cash came in, so since it's an inflow, we're going to put a positive $80,000. And then going back to our other information, we paid a cash dividend of $30,000. When we pay a dividend, remember we debit either retained earnings or dividends payable, and we credit cash. That's a cash outflow of $30,000. So I'm going to do negative $30,000. Okay, so our cash provided or used in financing activity is a positive $50,000, so it's cash provided by financing activities. We had positive cash flow from financing activities. All right, so we have calculated our cash flow from operating activities, investing activities, and financing activities. Now we are going to add them all up to see if overall we had an increase in cash or a decrease in cash. So I'm going to add cash flow from operating activities plus cash used in financing activities, which is a negative number, plus cash provided from financing activities, which is a positive number. And I end up with a total increase or decrease in cash of $818,000. All right, Let's see if that is correct. We're going to check our work. So we're going to get the beginning cash balance. Remember, last year's ending balance is this month's beginning balance. So I'm going to go back to my financial statements and I'm going to select the 2017 ending cash balance of $690,200. So when I take my cash increase and I add it to last year's balance, I should get this year's balance. So let's see what happens. So if I have done this correctly, my ending cash balance for 2019 should be $1,509,000. And look at that, it is. So my statement of cash flow balances, I've reconciled what happened to cash. If I was explaining this on my project, I would say we had cash flow from operating activities of $841,800. I'd probably just round it, say 842,000, plus cash received from the issuance of stock of 80,000, partially offset by the purchase of plant assets for 80,000 and the payment of dividends of 30,000. Okay. If you're not doing cash for your project, then that becomes less relevant for you. But that is basically it for the statement of cash flows. So what I would like you to do is pull up the second worksheet and try to work that through on your own or with a friend. You can do it with a friend via Zoom, or if you have a classmate who is already within your germ circle, you can do it together. And then you can go through and watch the second video where I go through and solve for that one. But try and do it yourself first. That way you know where your questions are, and then you can ask them as you watch the second video. All right, guys, that is it for cash flows. All right, thanks. Bye.